Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here I am recording this on Friday evening, August 16th, after the market has closed, and AMC closed the week at a price of $4.99, just 1 penny below $5 a share, being down about 2.73% on the day, but going up about 3 pennies, closing the after hours session at 5:02. And so I wanted to do my weekly overview of the AMC chart because, in all honesty, it has been pretty boring the past couple months, just trading in this range from a low of $4.10 that was hit on May 31st up to this high here that was hit on June 6th at a price of $5.96. So it ranged from about $4 up to $6, so around $5 plus or minus 1. And with the price being right around $5, right in the middle there, I think that this is as good an opportunity as any that we have seen over the past couple of months to accumulate more AMC. But, I am an AMC ape, so I'm a little bit biased there. But, going over the chart, I have done these Fibonacci retracements, looking at the 786s as levels that we have pulled back to and found either support or resistance at them. And assuming that this high that was hit on August 7th, which was at a price of $5.21, being 1 penny lower than the 786 here in purple at a price of $5.22. I'm going to assume that was the top there, and so I've done another Fibonacci retracement here with the 786 in white here at a price of $4.58, right around there, which is below the blue 786 at $4.73, as well as the yellow 786 at $4.64, right around there. And so, I could see price potentially coming down to this level, but considering there are these other 786s above it, hopefully they will act as support. But really what I find compelling is for price to dip down to around $4.90 next week, as if we do look here at this intersection of these two lines, the white and orange one, that is at a price right around $4.90. So I suspect we will dip below that level. Hopefully we don't get closes below that level, because I would like to see these uptrends be respected. And those uptrends are first the white one based on these two pivot lows, one being the low from May 31st at 410, the other being the low from June 25th, which is at a price of 433. So that is how I draw that trend line, which has acted as support up here other than this candle that did break below it. So I'm wondering if that will still act as support. And with this orange trend line intersecting with it, I think we could be seeing a lot of support right around 490. And so that orange trend line, if I do take a step back, that goes back to the all-time low at 238. And the other pivot point is the low just before the squeeze up that we saw. That was the low hit on May 10th. That is at a price of $2.90. So that's how you draw that trend line as well. And, I find that to look pretty compelling, that we will be finding some support there. And if not, there are a number of levels, these prior levels of support, the 786s, that I do think will be holding the stock price up. So, if we do see price come down to 490, 473, 464, 458, or maybe this red one right around 450, I do think we could be finding a lot of support there. So, I don't think it would be that bad if price dipped a little bit lower, but it could always go even lower, breaking below and confirming below this orange trend line, maybe coming back to 410, maybe 420. So do brace for that if that does happen. But what I feel like looking at the chart, is just very bored about this stagnation that we've seen price in this $5 plus or minus 1 range. So not too exciting. But if I do flip over to the weekly time scale, I think that there is an important lesson here And so, following this big squeeze that we saw in the middle of May, we have seen 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks in this range. So, pretty boring. I think that retail is getting pretty bored holding shares with there not being much volatility. But if we do look back in time, I think there is a nice lesson for us if we look here. So this is the squeeze that we saw at the end of January in 2021. And what did we see following that big squeeze? We saw a little bit of an up move here, but for the most part, it did consolidate. And it took about a little bit more than 13 weeks. If we count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks. So about 2 more weeks from what we've already experienced. And then price started to go higher. So, all I have to say about that is it is pretty discouraging to be holding when we're in this boring range. But I do think that patience pays off. And I do think that if we are looking at price trading in this very boring range, I think that there are a number of levels that have served as great dip buying levels, these 786s, and I actually don't think that we're going to test them again. I think that 490 is it. And so, I'm going to be looking for that price next week, but I will also be bracing for if that fails. Maybe the big money tries to shake retail out of their shares by scaring us out, dropping it to 410. Or maybe even lower, maybe coming down to $4 a share, sweeping the lows here, scaring people out of their positions, and then we start to move a lot higher. So I think that's possible. So I would brace for anything between $4.90 down to $4 over the next couple weeks. I think it's going to be a tough couple weeks. I think the next month is probably going to be pretty tough to be holding. But I do think that we will be seeing some more up moves. I don't know when, but I'm here for it whenever it happens. And that's why I do these videos, just to share my thoughts. And if you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching and enjoy the weekend. Go watch Alien. It's awesome.